people think that it's only traders that could subject themselves to a high amount of risk. Investors also do. Why? Because if you are investing, there are some stocks or even cryptocurrencies that dump a lot, that they go down at a very, very, very high level, that they drop. If you are an investor, there's a level of conviction, there's a level of discipline that you don't panic while it's dropping. In this video, I want to answer a fundamentally interesting question. A lot of you guys, especially those who are investing in the stock market, like asking this: which is better to use, fundamental analysis or technical analysis? Or when should be the right time that you start using fundamentals or technicals? So I want to start everything off defining both of them. Fundamental analysis basically is you are studying the stock that you are analyzing from the lens of a business perspective, that you are coming in to that position because your goal is to, number one, be a long-term investor. And because you are a long-term investor, your main goal and your main narrative is to look at, is this business, is this company actually healthy, that since it's healthy, over the next few years, it will grow, it will earn, it will do better. Technical analysis, on the other hand, you are looking at it and you are analyzing it from a different set of lens. Fundamentals, your goal is looking at it from a perspective of the price versus the value, or what the company is in terms of how good it really is. However, for technical analysis, the main crux of technicals is you don't have to look at the value of the company. You're just looking at price and its relation to volume, and you're looking at it from a historical perspective, meaning it's under the context and under the guise of what happened in the past will happen again. And since it happened in the past, there's a chance also that since people are the ones that are actually investing, it means that it goes to cycles where it goes up, it goes down, it goes up, it goes down. And since it's also people that are investing, they tend to heavily be emotional in the way that they would treat their investments, and that poses opportunities on when you could buy when people are fearful, because it hits a level of buying support, and then selling also when people are a bit excited or when it's relatively at a higher price as well. So please do note that they're not against each other, because you can actually use both. Fundamentals is very, very good if you want to select, you want to get a context or a notion that you're getting something that's cheap. Technicals, on the other hand, is you're under the context that you want to trade on shorter perspectives. And please do remember this also, that if you are looking at it from a fundamental perspective, earnings normally come out every quarter. Then also, if you want to get a full year earnings, you have to wait for a year before you actually get it. And if it's 2022 right now, that actually means that the full earnings for 2022 will come out on the first quarter of 2023, and that also takes some time. You also need to be more patient in waiting for the disclosures to come out. But if you're the type of person that wants to sell inside an hour, you may not need to look at the fundamentals as much, because since it's cyclical, it moves up and down, maybe sell signals would already come out even before earnings disclosures would start to come in. Now, if you're a person that wants really to just to trade the volatility, technical analysis will work. I've made several videos on it, and what I basically use is maybe two methodologies. One is I trade the fluctuations. Number two is I trade the trend. In trading the fluctuations, I use support and resistance, and I use a couple of indicators as well, as similar to moving averages, RSI, and MACD. If I follow the trend also, my goal is to, if it's an uptrend, I want to position, I want to stay within it to the best of my capabilities. And when it starts to reverse from an uptrend into a downtrend, or starts to reverse already into another form of market movement, I also want to take profits, because it's no longer the way I want it to go. In the same way also, when it's in a downtrend, maybe if you are into futures, that could be a possibility also for you to short. Or also, if it's in a downtrend and you're just trading spot, it's an opportunity also for you to just stay away and wait for it to reverse even further. So similar, I also use MACD for it. I also use moving averages for it. For fundamentals, the main goal is to position and find companies that are good, that are growing, that are cheap. If they give dividends, then that's even better. That places a better narrative also for me, that okay, I'm buying something with good dividends, I'm buying something that gives me the ability I know that will be there and will have staying power. So people have this misconception also that those that can only trade are those that have a lot of time. Not necessarily. Why? Because you can do trading on your free time, especially if you're trading shorter durations, or you could place already take profit signals or cut loss signals also, that even if you are in your job, you're in your business, that when those signals get hit, you could already get out of your particular position. Or especially if you're trading US markets, if you're trading crypto, those are things that you can do also on the weekend. So people have this misconception that if you're trading, it will somehow conflict with your work or your business. Not necessary. If you're trading US markets, when you get home, evening time, you can actually trade it. If you're trading crypto markets, you can go with your free time also and just follow under that context, that just trade the weekends, and for you to be able to do that on a regular basis. So there's a lot of things that you could consider if you are a trader. It doesn't mean if you're busy you can't trade. If you watch the videos, I've also met several doctors, lawyers, entrepreneurs that are heavily successful in what they do, but they're still trading the market. People think that it's only traders that could subject themselves to a high amount of risk. Investors also do. Why? Because if you are investing, there are some stocks or even cryptocurrencies that dump a lot, that they go down at a very high level, that they drop. If you are an investor, there's a level of conviction, there's a level of discipline that you don't panic while it's dropping. There's a level of conviction that while it's slow, you buy. Please do remember that investors, people who follow fundamental analysis, buy when it's cheap, buy when there's blood on the streets, have the patience also to wait it out when there's nothing going on yet, or they also have the patience to accumulate, build life-changing base while it's down and low, and then they just ride it, and then when it becomes expensive already, they stop buying, or they already start to take profits as well, reap the benefits of them coming in early, building a larger amount of base. In the same way, for traders, they're not really there just to wait, but they're there to exercise patience also, that when they are in a stock or a crypto that's still heavily on an uptrend, that they have the notion also, the discipline and the patience also to ride that trend to the very end. If there's one thing that's parallel, patience and discipline, to stick to your plan up until signals to come out are already there. So what parameters should you look at if you are an investor in fundamental analysis? You could look at PE ratios or even price to book ratios to tell you if it's expensive. If you're the type of person that's into dividends, you can also look at dividend yield. The higher the dividend yield of the stock that you're actually buying, the better it will also be for you, because as the stock price goes higher later on, and as they give more dividends also, the yield that you are getting will relatively be higher. That's been one of my techniques also over the past few years. I try to find stocks that are low. As I find them that they're low, I just hold on to them and wait up until the dividends gets better and better and better. Then you receive passive income, you receive cash flow. Another thing that I'd like to mention is this: if you're a dividend type of investor, or if you're a person who's more passive, fundamentals will work very well for you. If you're the type of person also who wants to analyze and watch charts, analyzing charts doesn't mean that it will take a lot of your time. Suggestions before we put this video to a close: if you're watching this and you don't know actually what to start yet, try both. It doesn't hurt to learn both because they're tools. In college, you try to learn as much so that you get better in life, you move forward and you try to have an edge. In the same way also in the world of investing, the more you know, the more you take the time to actually learn, the better it will actually be for you as well. So you can try to learn technical analysis. If you want to trade, you can try to learn fundamental analysis also. We have a couple of seminars down below talking about technicals and fundamentals, teaching you how to select, teaching you also how to trade and time it using technical analysis. Details are down below, but feel free to not just learn but also execute. And then as you gain the confidence that you want to enter into a position, you want to buy something already based on what you've learned and what you've researched, put small amounts first, and then as you start to gain the confidence, as you become more adept in it, that's when you start putting in more. That's what makes investing very fruitful. When you not just learn, but you put money into it and you build the skill and experience attached to it. If you're asking me, I use both. These are things that have been very helpful for me, and I've been investing in the market for almost 15 years now, and it's something that the more you learn about it, the more you realize that you don't know much, that you need to keep on learning, keep on exercising, and keep on building that skill. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.